Alright, so the third chapter of your book, that is cost, unit and classification. Right, so in the previous two chapters, those were the introductory chapters of what business is, how you operate a business, what are the major transactions in the business, and then in the second chapter we looked at more into management accounting, the differences between management and financial accounting, the purpose of management accounting, the qualities of the information provided for the management to operate properly. Now in this chapter we will be focusing on the core area of management accounting. Now management accounting, as I told you guys, that cost accounting is a major branch of management accounting. So now we are going into the more detail of that, right? And this is the base chapter of that area, that if you want to go into the more detail of cost accounting, this is the base chapter. You have to identify or you have to understand the terms such as cost units and the classification of cost in different manner. So let's just start off with this chapter. The first thing that we need to discuss is a cost itself, right? So if I ask you what do you understand by the term cost, so what would you say? What is a cost?
The unit price. You can say unit price.
Okay, the price of anything. Anyone else?
The totality of an object.
Okay.
Cost of per unit.
Okay. So every one of you are to some extent giving the same answer, and that is absolutely right. So cost is something that is a price of purchasing any item, right? So if you look at the definition over here, it says that a cost is a measurement in financial terms of the amount of a resource consumed for a specific purpose. Now when we talk about more into aspect of an organization, so let's say organization is a manufacturing organization, so they might be using labor, they might be using material. So when they will be using some raw material, they would be purchasing that material. So the price of that purchasing that material will be a cost for them. Similarly, let's say you go out, you want to buy a can of a Pepsi, so that can of a Pepsi is worth like say $1, so that will be a cost for you, right? So the cost is the financial aspect. Now linking that to cost unit, continuing with the same example, right? You go out, you want to buy a can of a Pepsi, the price is $1 or the cost is $1. What will be the unit? The can itself, right? The unit is the item to which you can attach the cost or to which you can relate the cost. So if I am going to buy a can of a Pepsi, that $1, to which thing I am attaching the cost? The can itself. So the cost is the financial aspect and the product that you are buying will be your cost unit. So when we look at the definition, it says that cost is a measurement in the financial terms of the amount of a resource consumed for a specific purpose, whereas a cost unit is a unit of a product or service. Now that does not mean that we only talk about a product. Cost unit can be related to a service as well. Let's say we are providing you service over here, that is lecturing service. So cost unit can be cost per hour of lecture, that for 1 hour we will be charging, let's say $20, $30. So that is your cost unit. Cost unit. It can be single item, it can be a batch, it can be a job. How a batch? I'll give you one example. So let's say you want to buy a pack of cotton buds or a pack of toothpicks. So obviously when you will be buying that, it will be in a batch. You cannot buy one cotton bud or one toothpick, obviously, right? Similarly, a job. Now let's say you're calling a carpenter in your house to build a shelf in your house. So that is a job, a specific job. So you will be A cost unit can be single item, let's say a can of a Pepsi, can be a batch, as I explained you, can be a job, making of a shelf, or a contract. It can be a contract as well. Let's say the building of the world tallest building, Burj Khalifa, it was a contract which has to be carried out by the contractors, right? In relation to which cost may be ascertained and expressed. Ascertained means attached. A unit to which you can attach the cost. So the cost is the financial terms and the unit itself is the unit to which you are attaching the cost, right? Now moving on further, as we have already discussed that cost unit is a unit of product or service to which you can attach or relate a cost. The purpose. How many of you remember the purpose of management accounting? That was threefold: planning, control and decision making. Great. So if you look over here, the purpose of formulating a cost unit, the three of them are still the same: planning, control and decision making, with two additional purposes. That is, the first one is setting the selling price and the last one is the reporting. Now I'll explain you each one of them individually. First of all, setting the selling price. Why do you need a cost unit? Because you need to set a selling price. If you don't know the cost, can you set a proper selling price? Obviously not. And even if you make just a random decision to set a selling price, you might end up making a wrong selling price, which might result in a loss to the company. Planning. Now, when you formulate a cost, you know where your resources are going. You know which area is consuming more resources. So what you do is you plan, okay, now I will be reducing the cost on this particular area. Now I will be reducing the cost on this particular area of the product. Then comes control. When you're actually performing that, you control it. You compare. What's the major purpose of control? To compare, to monitor. So you monitor the performance. Okay, am I achieving my desired result or not? And in the end, you make a decision that which product to sell. Now let's say, if I relate to the cost unit, decision making, you can say you have two options to use a material A or material B within the same product. Now let's say BMW, they are making cars, right? So they have two options to take the tires from supplier 1 or supplier 2. If both are providing with the same quality, but supplier 1 is a bit cheaper than supplier 2, so obviously they will go with the supplier 1, because every company wants to cut their cost, right? And in the end, reporting. Now let's say your senior manager, your top level management is asking a report. If you don't know the cost of the product, so obviously you cannot relate it to the selling price as well. If you are not able to relate it to the selling price, you cannot tell the profit figure properly. So the point over here is that cost unit is required for 5 main purposes. First of all, the most important one, you need to set the selling price. You need to plan according to that about your resources. You need to control your performance, whether your cost is going up or down. You need to make a decision that where you should make the decision, whether go with option A, whether go with option B, and in the end you have to report that as well to your top level management, right? Cost classification, a major area of this chapter, a very important, very major area of this chapter. Now when we classify the cost, we classify the cost on 4 different broad headings, that is by nature, by purpose, by behavior and by function. Can any one of you tell me what do you understand that how cost would be classified in accordance with each of these different 4 areas? Any idea about it?
The price of the raw materials.
Okay.
And the expenses used.
Alright. Anyone else? That how do we classify the cost?
We add profit to it and
Okay, that's a different story. We are adding profit to it is a different story. Once, because profit would be added once you formulate the cost. So this is right now we are only talking about how to classify the different cost. Alright, I'll tell you guys. This is how we classify the different cost in an organization. Now, if you look over here, we have all 4 different areas: purpose, nature, behavior, function. Right? 4 different areas we are having over here. First of all, I will be talking about material, labor, expenses, that is known as the purpose. So, when you are making a product, you need to identify that where your cost is going more or where your cost is going less, either in material, either in labor or in expenses. That whether I am using more material, whether I am using more labor, or whether I am incurring more expenses on this particular product. Similarly, we have over here the nature of the product, nature of the cost, that is direct and indirect. Now, when we explain nature, we link it to the purpose. We link the nature with the purpose in order to explain the classification of the cost. So let's say we can have a direct material and indirect material, we can have a direct labor and indirect labor, and we can have direct expense as well as indirect expense. So this is how we define each one of them. Now, how will we define? We will come on function and behavior separately. Right now we are only discussing the purpose and the nature. So if you define nature, nature means that if you're, let's say it's a direct cost which you can directly identify in the product. Now let's say this is a pen, so the ink which is there in this pen, you can directly identify that, isn't it? The plastic from which the pen is being made, you can directly identify that. But there are some indirect costs as well which are incurred but at the back end, but you cannot see that cost within the product. So that cost will be known as the indirect cost. How? I'll explain you. So first three costs that we have is direct material, direct labor, direct expense. So as we were discussing, first of all I'll explain to you direct material. The determination criteria on which we decide that whether the cost is whether the material is direct or indirect is one, that is traceability. That whether you can trace that material into the final product or not, or whether you can find that material into the final product or not. If you can find that material in the final product, then it is a direct material. Now let's say if your company is making shoes, leather shoes, so leather will be a direct material, right? So the material from which you are making the shoes will be a direct material. But let's say the machine from which you are making the shoes, the oiling of that machine, when you put the oil in the machine so that machine can operate properly, can you find that oil in your shoes, the final product? Obviously not. So, but does that mean the cost is not incurred? Cost is incurred, but you cannot find that cost in your final product. So that cost will be known as the indirect cost, or that material will be known as indirect material. So if you look at the definition of direct material, which says that this includes material which may be readily identified with product units. For example, raw material, definitely you cannot make the product without raw material. Component parts, let's say BMW is making cars, but they are taking the seats of the car from some different company, so that is the component of that car, again that will be a direct material. Part finish work or primary packing work, because there are some products which you cannot sell without packing, so that packing cost or the packing material will be a direct material. Now on the other hand, we have indirect material, as we were discussing, that material which cannot be directly identified in the product. So we have over here oiling of machine or material used in negligible amounts. Now there's one MCQ in your revision kit which says that identify the indirect cost in a chair. So obviously the wood, the chair is made up of wood, definitely that will be a direct material. The covering of the seat, definitely there will be a direct material. And there's one option in that MCQ which says that staples to attach the seat from with the chair. So most of the students argue with me that again we can find the staples within the chair. Why are they considered as an indirect material? Look, the point over here is the criteria on which we decide whether the material is direct or indirect is that either you cannot find it in the final product, or even if it is there, it is in very negligible amount. It is not a major cost. If you are using 4 staples in whole chair, so what will be the value of 4 staples in the whole chair? Not even 1% of the cost of the chair. So we consider it as a indirect material. Are we clear? Now moving on towards the direct labor. Now let's say, continuing with the same example, you're working in a factory. The person who is operating the machine and making the product. So the criteria over here in material, we were talking about traceability. Here we will talk about involvement. Here we will talk about involvement, that whether the labor is directly involved in making the product or not. Now what I am trying to say is this, that let's say a labor is making the product, so again that will be a direct labor. Or even if labor is operating a machine that is making the product, so he is directly involved in the production, again he will be a direct labor. Now that was about manufacturing company. Let's come to the service industry. Hospital, are they making any products? They are providing service. So the doctors working or the doctors giving treatment to the patients, they will be the direct labor. Are you getting my point? Okay, now coming back to the factory. Let's say now we'll talk about indirect labor, right? Now we'll talk about indirect labor over here.
I have one question on the direct labor cost.
Yeah.
So that is actually, if we consider this labor cost we are paying per unit,
Yeah.
so then we can consider as a direct cost. Say for example, if any labor they are paying fixed salary per month, so how many products he produced, so we cannot identify. So how we can say this is the direct cost?
Okay, I'll answer you this question. Okay, I'll answer you this. Let's say if you are paying your employees, we have a complete chapter on labor, so we will be discussing that over there, but just for your answer, if a labor is paid a fixed salary, he cannot be a labor. He would, because there's a difference between a wage and a salary. Wages is paid either per unit or per hour. That is not paid to professionals like the managers, like the executives. They are paid monthly salary. Their salary is considered as an overhead, right? Because they are not directly involved in the production. Let's say supervisor. Supervisor is also paid a monthly salary because he is not a direct labor. He is an indirect labor. He is an indirect employee of an organization. So these kind of people are always considered as indirect, not direct, because the people getting fixed salary are not the people who will be involved in the making the product, right? Okay. So continuing over here, we are talking about the involvement in the production. So whenever the labor will be directly involved, it will be considered as a direct labor. Now moving on towards the indirect labor, right? Indirect labor, let's say we are talking about a factory, right? So the person operating the machine will be considered as a direct labor. What if there is another person who is just lifting the goods that have been made, completed, finished from one place to the another, from factory to stores? That will be considered as indirect labor. Why? Because is that labor making anything? He is only picking the goods from one place and shifting it to the other place. So that person or that labor will be called as indirect labor. Now coming back to the service industry, ward boys in a hospital, are they treating?
No.
Are they giving any treatment to the patients? No. So definitely they cannot be considered as a direct labor, but they are assisting the doctors who are the direct employees in order to provide their services to the patients. So similar is the case in the factory. They are not producing anything, but they are assisting. They are not directly involved in the production, but indirectly they are. Now when we talk about expenses, most of the expenses are indirect expenses. Now expenses, we can have electricity, expenses we can have gas bills, expenses we can have telephone bills or salary, no, that will be going in the indirect labor. So these are some of the expenses. Rent is one of the expense. So most of the expenses that a company have will be indirect. The reason is because you cannot associate. Can you say that how much rent is being used by one unit? How much electricity is being used by one unit? How much water is being used by one unit? Obviously not. So when you cannot relate any specific expense to the product, so that expense will be considered as indirect expense. Now coming back to the direct expense, listen to this carefully. If there is an expense specifically for that product, specifically for that product, that without that expense product cannot be made, so that expense will be considered as direct expense. I'll give you one example, right? I'll give you one example. Let's say there are some special set of tools that you have to buy in order to make a new product, and after you are buying those tools, you are making the product, those tools will be not used anymore. So for which purpose are you buying those tools? For making the particular product. So for that particular product, the expense that you are incurring on the tools will be a direct expense. One more example I'll give you. Let's say you have a design of a car, right? You have a design of a car. You go to Toyota and say that I have a design of this car that you can use for your new model coming up for 2014. So you have a deal with Toyota. They say, okay, fine, we love your design. Great. But you are having some negotiation on the price. Now if the contract is not agreed, if you don't have an agreement, can they use your design without your consent? No. So can they make the car with the same design without your consent? No. So obviously when they will be paying something for that design, that will be a direct expense, because they cannot make a product without that particular design. So let's say you have a contract, you have an agreement, okay, this is the price, on each car give me this much amount. So that is known as royalty payment. That is known as royalty payment. So there are few expenses that I always ask my students to memorize as, because they are considered to be direct. The first one is the royalty payments. Whenever you have this word royalty payments, consider it as an direct expense. Plus, whenever you hear these kind of words, specific, special, particular. So whenever you have these kinds of words, special, specific, particular, these kinds of words indicates you that this is a direct expense. Other than these, all the expenses will be considered to be indirect. Is everyone clear with this one? Okay, so let's go through the definition of direct expenses. These are items other than direct material and wages which may be readily identified within a specific product units. Example are cost of special design, drawing or layout, or hire of tools for a particular job. Moving on, we have indirect expenses. All items which have not been previously defined as a direct cost expense. Examples are rent, rate, depreciation and other expenses will be considered as indirect expenses. Now, the total of direct material, direct labor and direct expense is known as prime cost. Prime means the main, primary. It has come from the word primary. So, it means prime cost, the main cost, the direct cost, without which the product is impossible. Then we have the total of indirect material, indirect labor and indirect expense is known as production overheads, right? So we will be doing a cost card over here as well. I'll show you. So when I will be making a cost of a product, the first thing that will come will be prime cost plus production overheads. We can also write OHDs for the overheads. So when I will total this prime cost and production overheads, so it will be known as total production cost. Right? So whenever examiner tells you calculate the total production cost, what will you do? You will calculate prime cost, you will calculate production overheads and then add them. Okay? So this is what you have to do. Keep yourself limited up till here. What is after that, I will be telling you in the complete cost card. So that was the classification of the cost according to the nature, according to purpose. What two kinds of purpose do we have? Direct and indirect. What three kinds of nature we have? Material, labor and expenses. So we can have direct material, indirect material. We can have direct labor, indirect labor. We can have direct expense, indirect expense. Is everyone clear with this? Great. Now moving on towards the classification of cost based on the function. We looked in our first class that an organization can have different functions, right? An organization can have different functions. That can be administration function, marketing function, finance function, advertising, HR. So whenever you distribute the cost in an organization based on these functions, the classification is known as functional classification. So let's say the first one is administration cost, the cost of managing the organization. So you manage the organization, you have some receptionist, you have some administrator who look over the organization as a whole, that what is going in the organization, some cost is being incurred for that. Selling or marketing, the cost of bringing your product to the doorsteps of the customers, because if you have made it, everything is good, the quality is fine, but you are not marketing it, What's the point? The customers are not aware about your product. They will not buy it. Distribution. Now you have created awareness about your product, but they are not at the reachable area of the customers. They are not given to the retailers. They are not given to the wholesalers. Will the customer be able to buy your product? Not possible. Then we have finance cost. Finance cost incurred to finance the business. Means you are getting some loan from the bank. So definitely you have to pay the interest. So that interest is known as your finance cost, because you are bringing finance into the company. So for bringing that finance, you have to bear some cost, because bank is not your friend. The bank will not be giving you money for free. They want to earn as well. They want to make money as well. So what they will do, they will be giving you money on interest, and interest will be the income for the bank and expense for the company which is borrowing the money from the bank. Is everyone clear over here? So this is how a cost card looks like. So whenever we are making the total cost of a product, this is how we make a total cost of a product. So first of all, we will have these three items: direct material, direct labor and direct expense, known as what? The total will be known as prime cost. Then we will add production overheads in that. What are the three production overheads we have? Indirect material, indirect labor and indirect expense. Okay, we added production overheads. So what do we got? Total production cost, also known as the factory cost. After that, we add some of the non-production overheads. There are some overheads. Overheads means indirect cost. Overheads means indirect cost. So there are some overheads which are related to production. There are some overheads which are not related to production. And there are three overheads which are not related to production, which is administration, selling and distribution. So if I want to sum up my total cost of a product in 4 steps, how will I do? Prime cost plus production overheads plus non-production overheads is equals to total cost of the product. Okay, so what is prime cost made up of? Direct material, direct labor and direct expense. What is production overhead made up of? Indirect material, indirect labor, indirect expense. And what is non-production overheads made up of? Admin cost, selling cost and distribution cost. Okay, guys, please don't forget these things. Don't ever forget these things, because these are the things which you will be taking on towards MA2, then towards F2 and then towards even F5. So you need to have a firm base at least of these things, so that if you are sitting in paper F5 of ACCA and you are having problem with cost card, you don't even know what you have forgotten that the prime cost is a total of direct material, labor and expense. Believe me, you will be doomed. Okay, moving on further, the last and the most important classification of the cost, that is the classification of the cost based on behavior. Now, when I talk about behavior, behavior means influenced by something. You react because of the influence of something on yourself. So when we talk about cost over here, the behavior of the cost is related or is based on the level of activity. Level of activity means production of units. More production or less production, what will happen? That I will be telling you. So we have 4 different behaviors of cost. 4 different behaviors. First one is variable cost. Second is fixed cost. Third is mixed cost. And the fourth is step fixed cost. So 4 behavior we have: variable, fixed, mixed, step fixed. The first one is behavior. The first one behavior is variable cost. What is meant by the term variable? Yeah, variable means the one which can be changed. Okay, so I'll give you one example. You go to a supermarket, right? You buy a pack of milk that is worth, let's say, $10. If you buy one, how much will it cost you? 10. If you buy two, how much will it cost you? 20. If you buy 10, how much will it cost you? 100. Now tell me one thing. As the level of activity is increasing, the cost is also increasing. In a different proportion or a same proportion? Proportion means that the change which is coming by the same amount or a different amount? Same amount. So can you say the proportion is same? The relation between the cost and the units is exactly linear. Linear means straight relation. So variable cost, we define it increase or decrease in the total level, increase or decrease in total. Now when I'm talking about the cost, there will be two different kinds of cost for each one of them. For variable we have two, fixed we have two, semi-variable we have two, and step fixed we have two. Two different kinds. That is, in total what will be the effect on the cost, and on per unit what will be the effect on the cost. Now every one of you is aware of what is cost per unit. Cost per unit means cost of 1 unit. Cost of 1 unit. Okay. So in total, if you are buying 1 pack of milk, $10, 2 pack of milk, $20, 10 pack of milk, $100, and each is increasing by 10. So proportion is linear. Now if I attach the same example in context of a business, now let's say BMW buying tires. One tire is costing them $100. How much will 4 cost? 400. If they are making 2 cars, use of 8 tires, how much will it cost them? 800. So when they will be making the cost, the more number of tires, the more will be the cost. So that will be a variable cost for them. Okay. Now tell me one thing. It is usually assumed that there is a linear relationship between cost and activity. What is the activity? Number of units. So linear relationship means straight relationship. As the units will go, okay, on the x-axis over here, what are we having? This is x-axis. What are we having over here? Activity. And on the y-axis we have price or the cost. So you can see, if my graph is going over here, it means that activity is increasing, and if my graph is going over here, it means my cost is increasing. So I have a graph over here like this, starting like this. Okay. So what does it show? What does it represent? That as the level of activity is increasing, the cost is also increasing with the same proportion. With the same proportion. That is why we are having a straight line. Straight upward slope. Straight. But coming on to the other side of the variable cost, that is variable cost per unit. This is what we are talking about, total variable cost. Total variable cost means that for 1 unit 10, for 2 unit total is 20, for 10 units total is 100. So when I talk about variable cost per unit, for 1 unit, is the variable cost changing? No, because if you are buying 1 unit, it is 10. If you are buying 2 units, in total it is 20, but again 1 unit it is 10. If you buy 100 units, the total will be 10,000, but still for 1 unit it will remain 10. So when we make the graph of variable cost per unit, no matter how the level of activity increase, this will remain a straight line, no slope, a straight line. Straight line means no change with the level of activity. No change is coming in the cost per unit. per unit variable cost does not change. Is everyone fine with that? Now, what I'm trying to say, if I accumulate this all, I'm trying to say this, that if you buy 10 can of Pepsi, if you buy 10 can of Pepsi, it will cost you 20 real, right? It will cost you 20 real. But if I ask you, okay, your total cost was 20 real, but how much did it cost you for one can? You will say 2. Because for each can it was costing you 2. So that is the case over here, that on per unit basis the cost will remain same. It will not change. Is everyone clear? Great. Now moving on to the next one, which is fixed. So we will be talking about each one of them. First, effect on total, and then effect on per unit. Okay, fixed cost in total. Any example?
That is the fixed cost means, so whatever activity is there, so the level of the cost, it will be same.
Exactly.
The rent cost, if the building rent 50,000, so whatever production is there, so does not matter, the 50,000 per month the rent will be.
Exactly. Perfect example. Perfect. Now, he's saying that fixed cost is a cost which remains at the same level irrespective of activity level. It does not change with the level of activity in total. In total. Now, let's say if your rent is 50,000, right? You are having a factory over here. Your rent is 50,000. So at the end of the month, will your landlord say this? Okay, if you have not produced any unit, does not pay me. Will your landlord say that? He will say, whether have you produced any unit or whether have you not produced any unit, you have to pay me rent at the end of the month. That is fixed. That is agreed. So fixed cost is a cost which is not affected by level of activity and remains at the same level. That is why we have again a straight line over here. Straight line. Straight line. No matter how much level of activity, the cost will remain at the same level. Now, do not ever confuse it with variable cost per unit. It is both, for both of the activities, for both of the cost, we have same graph, but this one is for per unit. Variable cost remains same on per unit basis. Fixed cost remains same on total basis. Is everyone understanding what I am trying to say? Or any confusions are there? Okay. Now let's say I'll give you one example. Your rent is 1,000 and you are producing, let's say, 100 units. So what will be rent per unit? 10. Now rent remains same. Instead of 100 you are producing 200. 5. Okay. Now rent remains same. Instead of 200 you are producing 300. 3.33. Again rent is same. Instead of 300 now you are producing 400. 2.5. So if you analyze this situation, as the units are going up, the per unit cost is coming down. It is coming down. One thing is clear, that as my units will go up, my cost will come down, because it is a basic mathematics rule that if your numerator remains same but the denominator is increasing, so automatically your result will come down. Okay, the next point, if you identify this cost per units, first of all it was 10, then it came to 5. If there would have been some linear relation between them, after 5 it should have been 0, because from 10 to 5, 5 to 0, same relation, but from 5 it is coming to 3.33. From 3.33 it is coming to 2.5. So is it reducing with the same amount every time? No. It is not reducing with the same amount. So that is why when we will be making the graph of fixed cost per unit, fixed cost per unit, it will be first of all a downward curve, a downward line, but in a curve manner. Why curve? Because there is no straight relationship between the cost and the activity. It is a curvy relationship. Curvy means no straight. In variable cost, we were having the straight relationship. For 1 unit, 10. For 2 unit, 20. Here, we are not having any straight relationship. The cost is coming down, but not with the same proportion. Is everyone fine with that? Step cost. Now, when we talk about step cost is a cost which remains fixed. It is, you can say, an advanced version of fixed cost. Advanced version of fixed cost. It remains fixed up to certain level of activity. That, okay, now you have a showroom of a car, right? How much cars maximum you can accommodate in one showroom? Let's say 10. Okay. What if you have 15 cars now? You will need a new showroom. So, until and unless your inventory is under 10, your cost of that one showroom will remain fixed, because rent is fixed, right? Rent is fixed. But as soon as your inventory crosses 10, you will need a new showroom. So now you will be giving rent of 2 showrooms. So let's say your limit over here was 10 cars. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Now as soon as it reaches 11, your rent was, let's say, 5,000. As soon as it reaches 10, so after 10, the 11th one has to be accommodated into a new showroom. So for new showroom, you will have to pay the more showroom, more rent. It will remain 10,000. Now it will go to 10,000. Now from 11 to 20, again it will remain fixed. And then for 21 to 30, again it will remain fixed. So in step cost, why do we call a step cost? Because it remains fixed. Suddenly there is a step up and then remain fixed. Again step up after certain level of activity. Now let's say there is one supervisor. The salary of a supervisor is fixed salary, monthly fixed salary. So he can control only 5 people in a team. So if there are 2 more people, so for those 2 you will need a new supervisor. So again there will be a step up in the cost. So step cost is so called step cost because it remains fixed, and you guys know that fixed cost in total have a straight graph. It does not change. So it remains fixed, but after certain level of activity it increases and then again remains same. How do you think will be the per unit graph of step cost? How was the graph of fixed? It was something like this. A downward curve for fixed cost per unit. So what will be for step cost? Can any one of you think of it?
It will go from down.
parabola.
You're right, to some extent it will be something like this. Since we have step ups in the total cost, we are also going to have step ups in the per unit graph, and it will be something like this. Come downward, then something like this. So the more number of step ups you are going to have, the more number of step downs you are going to have in your per unit cost. So you can identify that with an example as well, right? Now the last one is the semi-variable semi-fixed or mixed cost. Three names it has. Semi-variable, semi-fixed or mixed cost is a cost which has the qualities, which has the attributes of variable as well as fixed cost. Any example? Any example you guys can think of?
Telephone package.
Exactly.
So for mosaic level, 250 you use or not, 250 you have to pay.
Exactly.
Charge the mobile calls.
You can take example of telephone bills. You can take example of electricity bills. Because in electricity bills, there's one thing called line rent. Telephone bills, there's one thing called standing charge, line rent. So even if you do not make or any single call, or even if you do not use any single unit of electricity, you will have to pay the line rent. You will have to pay the standing charge. So that is what? That is your fixed cost. Plus on top of that, if you use the electricity, if you use your phone, so you will have to pay for that according to the usage. For 1 unit, the price is $5. So let's say if you are using 10 units, your bill will be $50 plus the line rent. So mixed cost is a cost which has the qualities of both the variable cost and the fixed cost. So when we make a graph, what was the graph of fixed cost in total? It was a straight line like this, whereas the graph of variable cost in total was like this, right? So if you see over here, it is a combination of both. Now let's say it's starting from this point rather than starting from this point. So can I say from this point onwards, this area is and this area is, so when I combine both of them, it will be the mixed cost. Is everyone easy with that? Any problem? Great. So why it is starting from here? Why not from point of origin, that is 0? Exactly, because even if you do not have any level of activity, because at this point I'm talking about this point, right? At this point, do you have anything on the x-axis? No, it is 0. Even then we have some value on the y-axis. The point is that even if you do not make any single product, you still have to pay the line rent of the phone. Even if you do not make a single call, you have to pay the line rent. So that is the fixed part of the cost, plus the units you will consume, that will be your you can say the variable part. So when we talk about the examples, and the per unit will remain as it is, as it was for fixed cost, same, no change in that. Now when I talk about another example, salesman's salary, what do salesmen get? Commission, right? They have some part of their salary fixed, that even if they do not sell a single product, they will still get their basic salary. Plus if they sell more and more number of units, that will be their commission. So let's say on 1 unit they have $10 as a commission. So if they are selling 100 units, it will be $1,000 compiling of total commission. So that will be variable, but the basic salary will be fixed. Okay, everyone is clear with the 4. So what 4 behaviors do we have of cost? Variable, fixed, mixed and step fixed. Okay, and variable in total, what kind of graph do we have? A straight line going upward, linear relation. What about per unit? A straight line which is not affected by the level of activity. What about fixed costs in total? Again a straight line, not affected by the level of activity. What about fixed costs per unit? A downward curve. A downward curve. Why a curve? Because there is no linear relation in that. No straight relation in that. What about step fixed cost? It remains fixed. There comes a step up and then again fixed. What about semi-fixed? Start a bit up from the point of origin, because the point below that is called the fixed cost and the point above that is known as the variable cost. Is everyone clear with that? Great. Now, a very important method, very important technique, that is known as HighLow method. Now, if I come to you, I say to you, okay, this is your electricity bills, $1,000. Tell me the fixed, tell me the variable. I don't tell you anything, I don't give you any figure, I don't tell you any other thing. I'll just tell you, okay, 1,000, tell me fixed, tell me variable. You will be like what a stupid person this guy is. Without giving me any further information, he is asking me that what's fixed and what's variable. I should have more information in order to analyze that, right? So the point is, HighLow method is the best technique which is used in order to identify that what part of the cost is fixed and what part of the cost is variable, and for which cost it is applicable. Semi-variable. Because is there any need to identify fixed and variable in simply variable cost? Because it itself is variable, no part of fixed in that. Is there any need in fixed cost? Is there any need in step fixed cost? The only cost which is a combination of both is semi-variable, semi-fixed or mixed cost, right? So we only use this method for semi-variable cost. Now, what is the technique to use this method? The first step, you will be given some data, you will be given different level of activity, let's say production units, and the different cost at that level of activity. What you will do? First of all, you will identify the highest level of activity, then identify the lowest level of activity. So you identify the highest level of activity and the lowest level of activity. How? We will be doing one example, then you will be understanding that better. Deduct the lowest from the highest total cost and deduct the lowest output from the highest output. So that will give you variable cost per unit. Now, if you have variable cost per unit, you know that per unit cost remains the same. So if I am producing 100 units and for 1 unit it's 2. So for 100 unit it will be 200. So that is what you are going to do, and you will apply this formula, which is fixed plus variable gives you the total cost. How? Just look over here. So this is the data given to you. Okay, this is the data given to you. 5 periods are there, period 1, 2, 3, 4 and 5, and different costs are given to you: 10,000, 12,000, 8,000, 17,000 and 20,000, and output is also given to you: 10,000, 12,500, 7,500, 18,750 and 22,500. Now, what was the first step? To identify the high level and the low level of activity. You will always define high and low based on the level of activity, never on the cost. Never. You will always define, you will always identify, you will always choose high and low based on level of activity, and that level of activity can be anything. It can be units, it can be, let's say, number of patients, it can be number of material requisitions, anything it can be, right? So never on cost. Let's say over here identify. So the lowest level of activity is 7,500 and the highest is 22,500. So you identified that my highest activity is 22,500 and the lowest activity is 7,500. Now what you will do, the next step is to, this was the first step, right? Now the next step is to calculate variable cost per unit, and the formula to calculate the variable cost per unit is change in cost divided by change in output. How will you identify the change in cost? At 7,500 cost is 8,000, at 22,500 cost is 20,000. So the change in cost is 20,000 minus 8,000, and change in output is 22,500 minus 7,500. So that will give you the variable cost per unit. That will give you variable cost per unit. That on 1 unit how much variable cost is incurred. After that, what you will do, pick any level of activity, either high or low. You will get the same result from each one of them if you want to identify the fixed cost. So what was the formula for the total cost? Fixed plus variable. So now you have total cost. Let's say I am picking this one, the high level, right? I have picked high level. So on high level, what is the total cost? 20,000, right? What is the variable cost? 80 pence per unit. So I can multiply that by the number of units to get the total variable cost, and then subtract the cost of variable from the total to get the fixed cost. So that's what they have done over here. The formula was total is equals to fixed plus variable. Now if I take variable on the other side, because this is the formula, right? Total is equals to fixed plus variable. Now what I want to find fixed, variable is added over here. So if I take variable on the other side, it will be total minus variable is equals to fixed. So that is what we are doing. Total is 20,000. Variable I can identify. How many units I have produced? 22,500. Multiply by 80 pence per unit. So what we get? Total variable cost. So total cost minus variable cost gives you fixed cost. Getting it? I know it's a bit technical for you guys right now. So what we will do is, we will do one example on this. Take out your notebooks, right? Try to solve this example. Calculate first of all, the first step is to identify high level of activity and low level of activity. First of all, do that. Quickly, do that for me. High level of activity and low level of activity. Quickly. Just solve it on your notebook. Don't copy the question. What is the highest level of activity and what is the lowest?
90,000.
Okay, 90,000 is the highest and 65 is the lowest. Absolutely fine.
60 is the lowest.
Oh, sorry. 60 is the lowest. Okay. So 90 is the highest, 60 is the lowest. Can you identify the next step, that is variable cost per unit? What was the formula for variable cost per unit? Change in cost divided by change in units. Please do that. Identify variable cost per unit for me. Change in cost. What are the two costs that you have? 170 and 140, and the units that you have 90 and 60. So the difference between cost 30 and 30. So that will be 1. Okay, that will be 1. Everyone is able to identify variable cost per unit. So what we did in order to identify variable cost is this: variable cost per unit, that is 170,000 minus 140,000 divided by 90,000 minus 60,000. So 30,000 divided by 30,000, I have pounds 1 per unit. It means that for 1 unit, how much variable cost I am incurring? Pound 1. Okay. Now, can you identify fixed cost for me by picking any level of activity? Pick out any level of activity and try to identify the fixed cost. And what's the formula? Total is equals to fixed plus variable. So you can have the total by picking any level of activity. You can calculate the total variable cost as well, because you have per unit now. Units are in front of you. Multiply by that the units, subtract it from the total cost. Try to identify. The formula is total cost is equals to fixed cost plus variable cost. How much? 80,000. Okay. So your fixed cost will be 80,000 and your variable cost will be pound 1 or $1 per unit. And how did we got the fixed cost? Just look over here. Which level of activity you guys want me to pick? 90,000 or 60,000?
90.
90? Is everyone fine with 90? Okay, let's pick out 90,000. What's the total? What's the formula? Total is equals to fixed plus variable. What's the total cost at 90,000? 170,000. Okay, we picked 170. Fixed cost do we have? No, we need to identify that. We write F plus variable cost per unit we have, that is pound 1. How many units we have? 90. Okay, so this is add over here. If I take it on other side, it will become negative. So fixed cost is equals to 170,000 minus 90,000. So that will be 80,000. Okay, everyone fine with that? Any problems? Yeah.
So 170 is changed there.
No, I just write it the other way around. Doesn't matter. So 90,000 into pound 1 gives you total variable cost 90,000. So if you multiply anything by 1, that will remain the same. So 90,000 into 1 gives you 90,000. Everyone fine? Any confusion? No? Great. Now moving on further. Shall I move further?
Yes.
Everyone is copied? Copied? Great. Now moving on further, the next thing that we have in this chapter is profit reporting. Now what is profit reporting? There are two techniques from which we can report a profit or we can calculate a profit. There are two major techniques. One is called absorption costing. The other one is called marginal costing. Now absorption costing means that you will be taking what is the normal procedure to calculate the profit? Sales minus cost of sales, which gives you gross profit, and gross profit minus further expenses gives you net profit. So this is the figure, or this is the equation of absorption costing. So what's the equation of absorption costing? Sales minus cost of sales is equals to gross profit minus expenses is equals to net profit. Okay. In marginal costing, in absorption costing, when we are calculating this cost of sales, it means the cost of a product. The other name for cost of sale is production cost. When we are calculating, we take variable cost as well as fixed cost. We take both of them over here. But in marginal cost, in marginal costing technique, that is sales minus variable cost, only variable cost. So that will give us, instead of gross profit, it will be contribution minus fixed cost is equals to net profit. So when we talk about absorption costing, most of you or some of you might be familiar with it. That is sales minus cost of sales gives you gross profit, then gross profit minus further expenses gives you net profit. That's simple. And when we are calculating the cost of a product, the only difference between a marginal costing and absorption costing is in the calculation of a cost of a product. When we are calculating the cost of a product using absorption costing, we take variable cost and fixed cost, both. Like I'm making a product which has $60 variable cost and $40 fixed cost. So my cost of a product according to absorption costing will be 100. But if I am using marginal costing, under marginal costing I only consider variable cost. Fixed cost is not included in the cost of the product. Instead, the total fixed cost is subtracted from the contribution. So if you guys see over here, what's the formula? Sales minus variable cost, which gives you contribution. So let's look at the definition. Absorption costing and marginal costing are different ways of accounting for cost. Different ways to account for cost. Absorption of full costing. Full means variable plus fixed. The cost of the product for inventory valuation is variable production cost plus the fixed production cost. So when we are calculating cost of any product, we take variable cost as well as fixed cost. But when we are calculating the cost of a product under marginal costing, we only take variable cost. Is everyone clear with this? Okay. Now how do we do that? I will be explaining to you guys through an example. Look over here. So when I talk about marginal costing, normally in order to calculate the profit, first of all we will have sales, simple. Then we will have what? The variable cost. So the total of variable cost minus from sales give us contribution, gross contribution, then non-production variable cost gives us total contribution, from which we remove the fixed cost in order to get the profit. Whereas if you look at the absorption costing, that is sales minus full production cost. So that is full production cost minus from sales gives you gross profit. Then we have some under or over absorption, which we are not talking right now, which we will be talking on later on, the what is under or over absorption, not in this chapter. And then further expenses are deducted to give you the profit and loss. So in simple terms, you can memorize these two equations to be simple on the safe side, that in absorption costing, sales minus cost of sales give us gross profit, minus further expenses give us net profit, and then sales minus variable cost give us contribution, and contribution minus total fixed cost. Total fixed cost is removed from there, because in marginal costing technique we treat the fixed cost as a period cost. Now period cost means the cost relating to any one period. It is not going into the second period. But in absorption costing, some of the cost, in absorption costing, some of the fixed cost is going into the next period, because some of the closing inventory becomes the opening inventory of the next period. And that includes the fixed cost in the total production cost. So we'll be solving one example on this. Now the differences that we have talked about, marginal and absorption costing, the closing values are valued at marginal cost. Marginal means variable cost, whereas in absorption costing the value of the closing inventory is at full production cost. Full production cost means fixed plus variable. Over here fixed costs are treated as period cost, and over here fixed costs are absorbed into the cost of the product, because we are including that into the cost of the product. Production cost of sale does not include share of fixed overhead. Why? Because that is marginal costing, but over here it includes the share of a fixed production overhead. I know you guys might be having some difficulties in understanding this marginal and absorption costing, but that will come through practice when we will be practicing a lot of questions on that, right? Okay, one example I have to make you understand better how do we use absorption costing and how do we use marginal costing. One example. So the selling price that we have over here is 100. Material is what? Variable or fixed? Material is variable, because more material more cost, less material less cost, no material no cost. So that is your variable. Now one point guys, please always keep in mind, prime cost is always a variable cost, and prime cost consists of three things: direct material, direct labor, direct expense. So all these three are variable cost. Similarly, material variable, labor variable, and variable overheads itself is, they are telling that it is variable. So the variable cost will be total 40. So if you subtract sales minus variable cost gives you what? Contribution. Sales minus variable cost is equals to contribution. Great. And from that we subtracted fixed cost, so we have net profit. Now how to solve this question with the help of absorption costing and how to solve this question with the help of marginal costing, I'll tell you. Total absorption cost per unit over here is 65. Total absorption cost means fixed plus variable. So fixed is 25 per unit and variable is 40 per unit. So when we combine both of them, we will have what? Absorption cost. Okay. Let us say that in a month 1000 units were made, 900 were sold, that 100 items are left in the inventory. The profit can be calculated in two ways. And what are those two ways? Marginal costing and absorption costing. Okay. How many units we have sold? 900, right? So 100 was the selling price of one unit, and how many we have sold? 900. So the total revenue is 90,000. Great. And which approach we are using? Marginal. The first thing is sales. Sales is same for both. Okay. Now from sales, what do we subtract in a marginal costing? Variable cost. What was the variable cost? Okay. So in variable cost in this question, how much is the variable cost? 40. Okay. So 40 is the variable cost. How many units we made? 1000. So the total cost of making the units was 40,000. How much are still left in the inventory? 100. So we will remove that from the cost of sales, because what is the formula to calculate cost of sales? Opening inventory. Do we have any opening inventory? No. So keep it as 0 plus purchases. So how many purchases or production do we have? 1000 minus the closing inventory. How many units we have in closing inventory? 100. Okay, we have 100 units remaining in the closing inventory because we have sold 900. So 40 into 1000 gives you purchases or production minus the closing inventory. So you will get your cost of sales. So marginal cost of sales or the variable cost. So you subtract that from sales minus variable cost or variable cost of sales. Gives you what? Contribution. From contribution, fixed overheads. Now fixed overheads will always be based on the budgeted figure. What was the budgeted units? 1000. So on and per unit was 25. So 1000 into 25 gives you 25,000. So what is the profit we are having? 29,000. So whenever you will be calculating the fixed cost, it will always be based on the budgeted figure. And in this case, what was the budgeted figure? 1000 units. So 1000 into 25 gives you 25,000. Great. Now moving on, the next one, that is total absorption costing approach. Will there be any change in revenue? No change in sales revenue, exactly the same. Over here, the cost of sales, when we are calculating the cost of sales, will we only take variable?
No,
we will take variable plus fixed. So instead of taking 40, we will take what? 65. So 1000 into 65, this was your production or purchases minus the closing inventory. What's the closing inventory? 100 units multiply by 65. So what cost of sales you are having? 58,500. So sales minus cost of sales gives you what? It should be gross profit, but you don't have any further expenses. So your gross profit is equals to your net profit. So you have a net profit of 31,500 over here. And you are having a profit of 29,000 over here. The difference that you are having is because of the fixed cost. The difference that we are having is because of the fixed cost. How much is the difference? Calculate 29,000 minus 31,500. 2,500. Okay. Why are we having the change in the profit? Because of the fixed cost. Because we have taken the fixed cost over here in the cost of sales, but over there we were not taking the fixed cost in the cost of sales, we were completely removing it.
That is for 100.
So this 100 into 25 will give you what? 2,500, and the difference is 2,500. So the difference is because that 2,500 is now present in the closing inventory in absorption costing, but that will not be present in marginal costing because we totally remove fixed cost from that. But in this approach, fixed cost from one period's closing becomes the opening of the next period. So it gets rolled on into the next period.
That's for the
Absorption costing. Exactly. Because in marginal costing, we completely remove the fixed cost. So there is no chance for fixed cost going into the next period. And there is even no logic for taking the fixed cost of this period to the... does it make sense to you that I take, if I am paying rent for January, that should be removed off completely. Isn't it? If I am taking rent of January into February, what's the point of that? Any point? I have already paid for that. It should be completely removed from the contribution. So marginal costing approach is more useful in management accounting, and absorption costing approach is more useful in financial accounting. Okay? Because if you look at the income statement, we make income statement on the base of marginal or on the base of absorption costing. Okay, so that's it from the chapter. Take a break and then we will be coming back to talk about the questions. Okay, thank you.